Is lending getting more expensive? What is happening with rising interest rates? Let's take a look. The Bank of England are raising interest rates at the moment. We've now hit 1.25%, and I reckon we're probably going to continue to increase in those small increments, 0.25%, probably at the next few meetings of the Monetary Policy Committee. But what is the Bank of England trying to do here? Well, they're raising interest rates to try and curb inflation, and by doing so, they're actually almost exacerbating a recession. And if you think about it, in a recession, what does the Bank of England need to do to encourage people to spend again? Well, they reduce interest rates. And interest rates were at 0.25%. There was no way for them to go down. So in reality, what are they doing? They're raising interest rates to try and curb inflation, but then inflation's causing a recession. So when we get to the recession, the Bank of England then will drop the interest rates. So they're only putting them up so they can put them back down again. In reality, it's having a very small impact, but it will impact the confidence that consumers have when the interest rates come down again, which again will encourage spending in the marketplace. And then what impact is this having on lending when it comes to properties? Well, we're seeing the smaller lenders, they're actually pulling out of the marketplace because they haven't really budgeted for the rate rises that have come as quickly as they have. So what these lenders have done is they've put people on 2-year fixes, and now they're finding that the buy rate of their money internally is actually getting higher, so that the interest rates that they're charging out to the consumer actually isn't covering as much as they thought when it comes to how they're buying their money. So in reality, they can't afford to lend anymore. The bigger banks are less worried about this. They've been pricing this in for the last few months. But we are starting to see a reduction in the number of shorter fixed periods. So there are fewer 2-year fixes, loads of 5-year fixed options out there. If you're looking to go to a 2-year fix, you might be best on some kind of variable product that just tracks the market until you've got your property in a place where you want it to be, and then you put it on a 5-year fix. So there is an impact on lending. We are seeing interest rates going up slightly. We are seeing a constriction in the types of products that we're getting, but the banks have still got loads of money they need to get out there. They're just managing their risk. But the other thing that we're seeing is down valuations. It's so weird. We've got this booming market, which is probably going to continue to boom, recession or no recession, because the fundamentals behind property are still really strong. But banks are being cautious because of people's affordability. They want to make sure that they're not going to be repossessing properties. So they're telling valuers to be cautious as well, and they're down valuing properties in a market which is booming. It doesn't make any sense. I think this actually is a bump in the road rather than a huge problem. It's the same thing the valuers did when we got into the first recession in the pandemic back in 2020. They were cautious on valuations for a period, and then they actually started valuing really well. So I think we're going to see something similar. They're being cautious right now, and then when we see that the property prices are not being affected by the recession in a really strong way, then they'll go back to valuing normally, and banks will allow them to value normally as well. So hopefully that's been helpful. I'm definitely not a mortgage broker. I'm definitely not giving financial advice around any of this. So I suggest you go and speak to your broker and get their first-hand account of what's happening in the marketplace. But otherwise, thank you for watching. If you like what you see, please do hit the like and subscribe button. Otherwise, I'll see you in the next video.